Welcome to our channel where we dissect, discuss and delve into the fascinating world of cryptocurrency. We're your one-stop shop for everything crypto, from breaking news and market trends to expert insights and analysis. Today, we're diving headfirst into a topic that's been making waves in the crypto community, the Bitcoin ETF saga. Now, if you're wondering what an ETF is, it stands for Exchange Traded Fund. In simple terms, a Bitcoin ETF would allow investors to buy into Bitcoin without having to deal with the technical challenges of purchasing and owning the actual cryptocurrency. It's been a hot topic for years, with numerous applications being submitted to the US Securities and Exchange Commission, SEC, only to be rejected or delayed. But what if suddenly the SEC announced its approval? How would the crypto world react? Hold on to your seats as we take you on a wild ride through an unexpected turn of events that recently unfolded, shaking the very foundations of the crypto markets. Stay tuned! Did you catch the recent hullabaloo in the crypto world that had everyone on edge? In an unexpected turn of events, the US Securities and Exchange Commission, or the SEC as it's more commonly known, announced that its Twitter X profile was compromised. This wasn't just any ordinary breach. The intruder had the audacity to post a false ETF approval message, causing a whirlwind of speculation and confusion. Gary Gensler, the chair of the SEC, took to the social media platform to clear the air. In his statement, he clarified, the SEC Twitter account was compromised and an unauthorized tweet was posted. The SEC has not approved the listing and trading of spot Bitcoin exchange-traded products. Now, let's rewind a bit. Here's what had happened. The SEC's compromised account posted a message that read, "Today, the SEC grants approval for hash Bitcoin ETFs for listing on all registered national securities exchanges. The approved Bitcoin ETFs will be subject to ongoing surveillance and compliance measures to ensure continued investor protection." This message was posted around 9:30 in the evening UTC on the 9th of January. But here's the catch. It was taken down within approximately 10 minutes. This unexpected incident and the SEC's swift response sparked a flurry of reactions from various public figures. But we'll delve into that in the next scene. Quite a rollercoaster ride, wasn't it? But the story doesn't end there. As expected, this unexpected turn of events did not go unnoticed. The crypto world was abuzz with reactions, some outraged, some amused, but all deeply invested in the outcome. Public figures were quick to weigh in on the SEC's blunder. Co-founder of Gemini, Cameron Winklevoss, didn't mince words, implying that the SEC's error could harm crypto prices. It would be great if they would stop manipulating the Bitcoin market, he stated, expressing the frustration of many. The backlash didn't stop there. Tech specialist and whistleblower Edward Snowden's response was, let's say, more blunt. He wrote a pointed message to Gary Gensler, the chair of the SEC, stating, "Gary, get your stuff together. You had one job." Snowden, along with others, highlighted the irony of the situation, reminding the SEC that it had previously touted itself as the best source of information on its own operations. But the SEC's troubles were far from over. Fox Business reporter Charles Gasparino raised a significant point. According to securities lawyers, the supposed account compromise could have violated the SEC's own cybersecurity rules. These rules, which were adopted in July of 2023 and came into effect in December of the same year, primarily set timely disclosure requirements for certain companies that experience a security breach. The SEC, it would seem, may have fallen foul of its own regulations, adding another layer of complexity to an already tangled web of events. This is not just about a tweet gone wrong or a potential market upset, but a question of accountability and adherence to set standards, even within the walls of the regulator itself. Amidst the chaos, some interesting theories have come to light. While the dust was still settling, the crypto community was buzzing with theories. Questions were swirling, speculations were rampant, and just like that, the world of crypto was a hub of conjecture. One of the most compelling theories came from Bloomberg ETF analyst Eric Balchunas. He put forward the idea that the original message posted by the SEC was not a mistake, but was legitimate. It could have been a case of an incorrectly scheduled post, an error in timing rather than content. It's a plausible theory, considering the intricacies of social media scheduling and the human element involved. Balchunas didn't stop there with his predictions. He maintained his earlier forecast that the SEC will indeed grant approval for a spot Bitcoin ETF. This prediction is not to be taken lightly, as Balchunas is known for his insights and expertise when it comes to exchange-traded funds. His colleague at Bloomberg, James Seyffart, supported this speculation. He pointed to the seeming authenticity of the SEC's original tweet, further strengthening the theory of an incorrectly scheduled post. It's also worth noting that the SEC is required to reach a decision on ARK Invest's application for a Bitcoin ETF. This decision is set to happen today, adding another layer to the speculation and anticipation surrounding the SEC's stance on Bitcoin ETFs. So what does this all mean? It may suggest that the SEC is indeed on the verge of approving a spot Bitcoin ETF, a move that would undoubtedly send ripples through the crypto world and beyond. It could be a pivotal moment, a turning point in the history of cryptocurrency. While we wait for the verdict, let's take a look at some other recent developments. In other news, BlackRock has stirred the pot with its latest move. The financial titan recently dropped its ongoing fee for its proposed spot Bitcoin ETF to a mere 0.25%, and it doesn't stop there. They've also introduced a promotional offer of just 0.12% for the first $5 billion in assets, or for the first 12 months. This move is a clear signal of BlackRock's intent to aggressively compete in the crypto world. And it's not just about attracting investors, it's about setting the stage for a new kind of competition. A fee war among asset managers in the crypto space. Now, let's put this into perspective. Until now, asset management fees in the crypto world have been relatively high. The reason? The inherent risks and volatility associated with managing digital assets. But BlackRock's decision to slash its fees is a game changer. It effectively lowers the barrier to entry for investors and could potentially usher in a new wave of crypto enthusiasts. But here's the interesting part. BlackRock's move isn't in isolation. It's part of a broader trend. Over the course of this week, we've seen several asset managers follow suit, lowering their fees in what appears to be a race to the bottom. Earlier, BlackRock had filed for a 0.3% fee with 0.2% for the first $5 billion, or for the first 12 months. And while it's too early to predict the long-term impact of this fee war, one thing's clear. It's heating up the competition. The crypto world is no longer just about who has the most innovative technology or the most secure platform. It's also about who can offer the most attractive terms to the investors. So, what does this mean for you? Well, if you've been on the fence about investing in crypto, now might be a good time to reconsider. With lower fees and increased competition, the landscape is becoming more investor-friendly. And who knows? You might just find yourself in the midst of a crypto gold rush. The crypto world never ceases to surprise us, does it? As we wrap up, let's summarize the key points from today's discussion. We started with the unexpected turn of events when the US Securities and Exchange Commission, or SEC, announced that its Twitter X profile was compromised. A message was posted that falsely claimed the approval of spot Bitcoin exchange-traded products, which stirred up quite a storm in the crypto world. This was quickly followed by a denial from the SEC, causing confusion and leading to a significant backlash. We then delved into the fallout from the incident, with various public figures, including Gemini co-founder Cameron Winklevoss and tech specialist Edward Snowden, expressing their discontent. The error even led to accusations that the SEC itself could have violated its own cybersecurity rules, which were put into effect in December 2023. The plot thickened as we explored various theories and speculations surrounding the SEC's decision on the spot Bitcoin ETF. The possibility that the original message may have been a legitimate one, but incorrectly scheduled, added another layer of intrigue to the saga. Despite the confusion, there's still anticipation that the SEC might approve a spot Bitcoin ETF soon, with some predictions suggesting a decision could come as early as today. Lastly, we discussed the ongoing fee wars in the crypto world, with BlackRock making headlines for dropping its ongoing fee for its proposed spot Bitcoin ETF to just 0.25%. This move, seen as part of a race to the bottom, reflects the competitive nature of the crypto asset management industry. So as you can see, the world of cryptocurrency is as unpredictable as it is exciting. One thing's for sure though, it's never dull. Keep your eyes on the crypto world, folks. It's a wild ride, but it's definitely one worth taking. All right, folks, that's it for today's episode of Crypto Chronicles. We want to take a moment to thank you all for tuning in, for your time and attention. We know you have a lot of choices when it comes to getting your crypto news, and we're grateful you chose us. If you found this video informative and enjoyable, please hit that like button, subscribe to our channel, and don't forget to leave a comment. Your feedback helps us bring you the best content and keeps us on our toes. We've got a lot more exciting updates, analysis, and insights from the world of cryptocurrency coming your way, so make sure you stay tuned. Remember, the crypto world is ever evolving, and being informed is the best way to take advantage of this digital revolution. Thanks for watching, and see you next time.